Hey Trailblazers, it's Michelle Edwards, CPA, owner of Trailhead Accounting Solutions. Thank you so much for joining us. So today I'm going to talk to you about budgeting. Are you frustrated with the budgets you've done in the past that don't improve your cash flow, that don't help improve your profits, and you still feel like your business is taking all of your money? Well, then today's video is for you. So I've been reading this book, Simple Numbers, Straight Talk from Greg Crabtree, and what I love about it is in the first chapter, he talks about 10% is the new break even, which is brilliant. So many business owners put together a budget and they put it right to zero. So they have all of your income, then all of your expenses, and the bottom number goes right to zero. Well, that works great if everything in the year is going to go according to plan. However, if you've been in business for longer than a couple months, you'll know that nothing goes according to plan, right? Things happen. Vendors go out of business. Your big supplier, who is the cheapest, goes out of business. Maybe your other vendors raise their rates. Your largest client gets bought out by another company and their purchasing company no longer needs your services, so you lose that company as a client. All sorts of crazy things can happen throughout the course of the year. Now, if you're budgeting, your income and your expenses go right to zero, you have no wiggle room for any of these changes and ups and downs in your business that happen as just part of your day-to-day business operations. But what I love about this book from Greg Crabtree, he talks about 10% is the new break even. So when we do our budgets, we want to put it to a 10% profit. So what does that mean? If you are going to have a $100,000 a year, then your bottom number should come to $10,000. If you're going to have $1 million a year, your bottom number should be 10%. It's going to be $100,000. So you're going to budget to that 10%. That way, throughout the course of the year, if you've got these ups and downs and ebbs and flows and things are changing, if bad things happen, it only drops you to about 5% net profit. And that means you still have some wiggle room. You're not below zero, negative cash flow, struggling to keep your head afloat. It might be tight at that 5%, yes, but you're not negative, which is huge. It still makes it so much easier to run your business. Then on the flip side, as your business grows, he recommends in his book going up to 15%. Once you hit 15% profit margin, then that's a good indicator that it's time to hire that new person, look at buying that machinery, look at adding those extra costs that are needed to support that growth that you just incurred. By hiring that new employee or getting those new additional costs should only bring that net profit then back down to 10%. Then at 10%, you're going to grow some more until you get that 15% net profit. And then you're going to keep going back and forth in here. The beauty with this is A, it's going to improve your cash flow. B, it's going to help you sleep at night, because if things go bad, you're not scrambling. You still have profit. You still have a little bit of wiggle room and time to get things going again. And when things are going great, it gives you a really great plan of when to hire that new person, when to expand, that new facility, when to increase those costs to support the growth. Then it helps you, you're not scrambling around. So as you try putting your budgets together, I challenge you to budget to 10% net income. See how it goes. Leave some comments down below. I'd love to see how it goes for you in this first quarter. See if that helps improve your business. Give us a like if you learned something new. And stay tuned. Next week, we will teach you how to put these budgets into QuickBooks and Xero. Thanks so much for watching. Have a great day.